Hey everyone, and welcome. Today, we're going to get right into something super important, how to make your cash work a whole lot harder for you, especially because the whole financial world is about to change. So let's get right to it. So let me just ask you this straight up. Is your money actually doing anything for you right now, or is it just sitting there? It's a really simple question, but the answer could literally be worth hundreds, if not thousands of dollars to you. And here's the deal. That opportunity to lock in these amazing 4 to 5% returns, it's closing. And it's closing fast. There's a real sense of urgency here, and we're about to show you exactly why. Which brings us right to our first section. Why is the clock ticking? The reason you gotta act now all comes down to the Federal Reserve and what pretty much everyone expects them to do very, very soon. Just take a look at this. According to the data from CME Group's FedWatch tool, it's not even a question of if the Fed will cut interest rates anymore, it's a question of when. The market is pricing in a 100% chance of a rate cut announcement next week. You almost never see that kind of certainty in finance. So why should you care about that? Well, here's the direct connection. When the Fed cuts its big benchmark rate, the APYs on regular savings accounts, they almost always follow suit and drop right down. Some banks are actually already starting to lower their rates, just thinking about it. This isn't just some abstract economic news. It has a direct link to the interest you earn. Okay, so enough doom and gloom about rates dropping. Let's flip this around and talk about the opportunity here. What could you actually be earning if you make a move right now? Let's put some real numbers on this. So, just to give you some perspective, let's say you've got $10,000 in savings. Moving it to a top account could net you an extra $250 in just 6 months. Now, if you have $25,000, that number jumps up to over $625. And if you're working with $50,000, you're looking at $1,250 in passive income in half a year. That is some serious money you do not want to leave on the table. Okay, so the potential earnings are pretty clear. The next logical question is, where do you actually find these accounts? Let's run down the high-yield hit list and check out your best options. Generally speaking, everything falls into one of 3 main buckets. You've got your traditional stuff from banks and credit unions, then you've got products from brokerages, and finally, you can always go straight to the US government itself with Treasury products. All right, let's zoom in on the 2 you'll probably see the most. With a high-yield savings account, the big pro is liquidity. You can get your cash whenever you want, but the rate is variable, which means it's going to go down when the Fed makes its move. A certificate of deposit or a CD is the opposite. It gives you a fixed rate, but it requires a commitment. You're locking your money up for a specific amount of time. And right now, with rates about to fall, that's the whole strategic genius of a CD. You can literally lock in today's high rates and protect it from all those future cuts. The catch, of course, is that penalty for pulling your money out early, so you have to be really sure you won't need that cash before the CD's term is up. Now, you're probably seeing a ton of best rate lists out there. So how do you know which one is the real deal? We wanted to pull back the curtain and show you exactly how we figure this out, analyzing over 200 different institutions every single day to build a list you can actually trust. It really all comes down to this simple but super strict 3-step filter. First, any place on our list has to be federally insured, no exceptions. Second, the account has to be available to customers all across the country. And third, we filter out any of those annoying gimmicks, like a high rate that only applies to your first $500 or something. Let's talk about that first filter, because it's so important. Federal insurance is all about your peace of mind. You got the FDIC for banks, the NCUA for credit unions, and they both protect your money up to $250,000. It doesn't matter if the bank is online only or right on your street corner. Long story short, your deposit is safe, period. So with that foundation of trust all laid out, it's time for the main event. Here they are, today's top-rate champions across all those different categories we've been talking about. So looking at what's best right now, high-yield savings is kind of the king of the hill at 5% if you want pure, simple access to your cash. Money market accounts are right there too, but they add check writing, which is nice. But here's the important part. Look at US Treasuries and CDs. They're both offering really strong fixed rates. That's your defensive play against those rate drops that are coming. But here's the thing you gotta remember. While these are the top rates on paper, the absolute best account for you, well, that totally depends on your own personal situation. Do you need that cash to be liquid, or can you afford to lock it up for a while for that guaranteed return? Only you can answer that one. At the end of the day, the difference between an average savings account and a top one isn't just a few pennies. The research on this is crystal clear. Choosing a top rate can put hundreds or even thousands of extra dollars in your pocket over time. It's such a simple decision with a huge payoff.
And all this really brings us to one final question. Your cash has all this amazing potential, just sitting there. Are you ready to go out and unlock it?